Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader, here with your Cabot Weekly Review, recording this as we finish out the first half of the year, recording this late Friday morning on June 28th. As always, if you're watching this on YouTube, give us a like, leave a comment, all that stuff helps with the algorithm. I do appreciate it. In terms of the market, really nothing's changed over the past 2, 3, 4 weeks. It's a very, not just divergent, some markets are divergent, but there's a lot to work with, meaning like going back to 1999, which is obviously very good to work with, but it was divergent, but you still had hundreds of stocks, 3 or 4 broad industry groups or sectors really working, that sort of thing. This is really more not just divergent, but narrow. Okay, like even this morning, excuse me, the NASDAQ popped to new highs on some good inflation report or quote unquote good inflation report. And right before I came on this video, it was like 80 new highs on the NASDAQ, which is just very low. You know what I mean? It's just, that's the way it is. So how it plays out, we'll see how it goes. There might be some repositioning as we head in the second half here. I will say there's a lot of stuff that it's not weak. It's just kind of consolidating here, really still in the consolidation correction, whatever you want to call it, that started in March. So if earnings season goes well, for instance, or there's some rotation, we could have a lot, or at least a decent amount to sink our teeth into. For now, though, I'm still in the same sort of, mid-range advice, meaning holding a chunk of cash as cushion, but, also, holding some relatively strong stocks and not getting too close to things. I've talked to a few people recently that you're kind of getting tossed in the surf, right? It's a trading range. So you buy, you get stopped out, then the stock bounces back, you buy back in, and then you get stopped out again. You're just kind of getting tossed in the surf. So right now, I think a little bit is less is more. And let's see how things go here as we head into July. In Cabot Growth Investors model portfolio, there are actually 2 or 3 names I really like and, I might pull the trigger on, but really haven't done anything for 2 or 3 weeks, just holding about 30% cash. And again, holding these stocks, which some of them get clonked. And then a week or 2 later, they've been bouncing back somewhat, and some of them look great, and then they get hit a little bit. It's just that type of environment. So right now, a little bit less is more as we see how things shake out as we head into July in the second half. Let's hop into the charts finally. We're using a program called Market Surge, Product of Investors Business Daily. You can learn more at marketsurge.com. So you can see as I record this, so the NASDAQ sort of gapped up to 18,000 and it's reversing. We'll see what happens. Again, there can be some funky stuff. Hedge funds get paid quarterly on performance. So, maybe they're selling, locking in gains, or, we'll see how it goes. But overall, from a position trader's point of view, clearly the NASDAQ and the S&P, it's the same story. They look good. NASDAQ best of all, which is good. Okay, and S&P 500 certainly in a firm uptrend. But then when you just run through, here's, the mid caps. We've just seen this before. Sideways, the New York Composite, you just go through chart after chart, just kind of sideways. And you dig into big things like here's the financials, right? It's not like, well, big caps are strong. Well, no, big caps aren't really strong. Let's look at the unweighted S&P 500 fund. This is RSP. This prior chart, by the way, I'm going a little fast, was XLF. So this is just, the financial ETF. RSP is the equal weight S&P 500, sideways. QQQE is the equal weight NASDAQ 100, stronger, a little stronger, but sideways, sort of thing. So that's just really where we're at. Now, I will say, again, and I've been saying this for a while, this is the MDY, for instance, but you could pretty much pick whatever you want. We're going sideways here. It's not that far from new high ground, okay? So I'm not saying, 2 days, but again, maybe things can be a little funky around the turn of the calendar here into the second half, but new quarter. But, you get a good week, say, a really good week, and this is boom, mid caps. All of a sudden, it's like, wow, that looks like kind of a launching pad. Now, we'll see how that affects, NVIDIA and the chip stocks and things like that. But overall, it's not weak. It's kind of hanging in there. And I would even say that some of this, I don't want to go too, in the weeds, but this is IWM, small caps, Russell 2000. Very sloppy. This was the correction in April. This was sort of in January. This is a little bit, I don't want to say tighter, but just kind of a little bit more under control. And you're going to see in the last 2 or 3 weeks, even though it's been underperforming, the underperformance has kind of stopped a little bit and it's been finding support. So, again, we'll see how it plays out. I don't want to read too much into a few days of action because, especially in a trading range environment, because money just kind of sloshes back and forth. But that's kind of what we're seeing. The other thing I'm seeing is just, and I would call this a small positive, not huge, but you look at the MTUM. This is sort of a momentum fund. It's called the momentum fund, but it tracks growth stocks a little bit. Has it exploded higher with a decisive breakout and is going to the moon? No. Is it a little bit stronger, though, than the rest of the market? Yeah, it's kind of holding out to new highs. You look at like the IBD mutual fund index, if I can type it correctly. Same sort of thing. It's this thick blue line. Is it roaring ahead? No, this is real money mutual funds. Is it roaring ahead? No. Is it out to new highs a little bit stronger than the rest of the market? Yes. So again, like when you have sort of the Dow industrials here, just kind of range bound, a lot of the market range bound, and growth is outperforming a little bit, even beyond mega cap, growth or whatever. To me, that's a small positive. Okay. And then, you just keep going. This is the industrial sideways. I could keep showing you examples. XLP kind of sideways here, a little bit, decent, but no rush into defensive stocks. Okay. One thing I wanted to say was this was kind of a good example. This is DraftKings, which we owned. We made some money in it, but it was just very tedious. I mean, you can kind of see it's like a kid scribbling on a piece of paper, and there's a lot of those sort of charts out there. But this is just kind of what you're seeing is, this is going back even to March. The stock looks great, breakout, so on and so forth. Gets hit very hard and then eventually collapses on tax news. I don't want to get into it. This is just an example in terms of the trading. And the stock just nosedives. Then the stock goes from 35 back to 45 in a couple of weeks, and it's like, whoa, wow, is that one big shakeout? And then it goes from 45 back to 37 within a few days. You're just seeing a lot of that type of action, the kid scribbling on a piece of paper. And that's why I was saying, don't get too close to, I'm not saying you should be holding, we sold this, but I just mean, a few weeks ago. But the point is you get too close to these things, you're in, you're out, it's back up, it's up 10%, it's down 10%, that sort of thing. Right now, I think if you are playing, just realize it's not like a lot of things are running away on the upside for 5, 6, 7, 8 weeks in a row. They're kind of going up for 2 weeks, hitting some selling. So if you want to play things like in Cabot Top 10 Trader, we are a lot of partial profits, some quick profits, and just, keeping those stops reasonably close, at logical levels, and just getting out when things don't work. Okay. So let's hop into the chart. That's where we are for the overall market. Let's hop in the charts. There's still a lot of stocks because it's not like the market's weak. It's just not really going anywhere. We're still seeing some action, not a ton of like huge accumulation. I'm going to mention Amazon. This isn't my type of stock. I'm more of an emerging blue chip guy as opposed to a blue chip guy. But it's hard to ignore. One thing I've always done going back to when I made some mistakes in 2007 was when you do get a big liquid stock, that is, it does have growth, obviously. It's not like Amazon's some stodgy company. Big volume breakouts on the upside. Doesn't mean I'm buying them, but I'm watching them, at least in terms of a metric for institutional sentiment. I don't underestimate them, I guess is my point. There is round number resistance here near 200, so we'll see what happens. But so far, I found that kind of interesting. The relative performance line hasn't confirmed. So again, you can pick a lot of these things apart, but the big volume, one of these days was the end of, was options expiration, but the 2 days this week were not. So that looks pretty good. Pinterest is one that, frankly, I don't really give away ideas here, but it's near the top of my watch list, but we'll see what happens. It's really, it looked like it was getting going here, kind of had this big correction after earnings earlier in the year, and then sort of changed character again on earnings. And since then, it's just been, I've mentioned it before, it's just been it's one of the few stocks that's very much under control. Even the stocks that look good, there's a lot of, like I said, kids scribbling on a piece of paper. This has just been kind of tightening up. Now, maybe we come in next week and it's a disaster. I don't know. But so far, the stock certainly acts pretty well. The price volume's good. So Pinterest is a name that, it's just a few, literally one good day from new high ground. Sort of the turnaround chip group, which is what I'm calling turnaround chips. So it's not like necessarily AI. It's kind of like things that have ridden the cycle and they will get an AI boost, but their, sales and earnings kind of have slowed down. This is ASML. It's kind of built this. It just broke out, I think this was in February. So it's not like it had some huge prolonged run. And now it's kind of built this second base. And you can see it's almost 3 or 4 weeks tight in here on a closing basis. We'll see where it closes this week, which is usually a good sign. It's a $1,000 stock, but still, a breakout to the upside here would be intriguing. Teradyne's another one I mentioned. Just you can see sales and earnings here were terrible. So it's been, the chip cycle has been bad, except for some AI stuff the last couple of years. But this just looks to me like a huge bottom. It's a big liquid stock and just really kind of a big blast off. And now the stock so far has had quote unquote trouble pulling back. You can see it's pulled back, but every pullback is kind of arrested here. The 25-day line's offering support. Again, we'll see how it plays out, but so far so good in that. Going forward, I'm still, of course, this has been like a broken record for years, but I'm still looking at some of these biotechs. This is XBI, the ETF that's a little bit broader for biotech. Nothing really doing. I mean, it's kind of, I would say stuff that I watch is stronger than this, but same sort of pattern where it came down. It did bounce after the market bottomed, but it's pretty much just slopped sideways during the past month or 5 weeks or so. But I am just seeing more names. I mean, NTRA has been one that's been strong for a while. And again, kind of like Pinterest, this one's had an extended run, so it's a little higher risk intermediate term, in my opinion. But what I do like about it is kind of like Pinterest, it's not, gyrating around with big swings. It's been, it's had some selling here, but it's been pretty cool, calm, and collected. You can probably see it better on the weekly chart. It doesn't look like out of character. There's no huge crazy volume weeks, on the downside. So we'll see how it goes, but that looks pretty good. But just we're seeing more. Like this was a news-driven move, but ALNY, ALNY, easy for me to say. You can just see these things have just been kind of torturous, but a nice bottoming formation here really the last few months, and then a huge move to new highs this week, obviously on news. Novo Nordisk is one of these, obviously the GLP-1 weight loss drugs. Eli Lilly's been performing better, but I mean, overall, this looks fine. And it looks, again, just under control. It's not going to be a super volatile stock, but you can see very, very tight in here on the weekly chart. So it's acting properly. And Sarepta, SRPT, this is interesting. It was in top 10 this week, I believe. You can just see it's been very sloppy, obviously news driven. But what's interesting is they do have real sales and earnings here, including massive earnings estimates next year, which I think are correct. I don't know, but $12 a share. But nice gap here on a label expansion. And I like to see these things sort of gap. I mean, you like to see them gap and go if you own them, but I like to see them gap. And if they do pull back, just kind of chill out here. So if this can just chill out a little bit, it would be pretty intriguing. And it is a liquid stock. So anyway, that group is just something that maybe if there is a rotation, quote unquote, or some money expands into other areas, maybe some medicals, biotech can finally kick in. And the other area was just software is kind of interesting, where this is IGV, which is a big cap sort of software thing. This day right here on this break, I mean, you can see it got hit. It topped out here in February ahead of the market, got hit with the market in April. And then after a bounce into May, it got destroyed. This is when Nutanix and like Salesforce got hit type thing. But it's been interesting. Since hitting the 40-week line, it's been just sort of, I don't want to say smoke up a chimney, not that strong, but it's been recovering very nicely. So it's kind of interesting. ServiceNow obviously is sort of a big cap name in the group. This is interesting because it did dive below the 40-week line. But this is now 4 weeks up in a row. It is running into resistance here. So, make up your own mind, round number and otherwise. But even so, it's kind of an interesting recovery. They do have earnings here on July 24th, most likely. AppFolio is a name I've mentioned before. It is sort of at least thinner on the number of shares traded side, not necessarily the dollar volume side. But you can just see some tightness in here, and it's really been kind of this multi-month consolidation in here, but nothing abnormal. Again, that's I'm looking for these names that are a little tight, under control. So APPF is interesting. Datadog is one that, it's kind of had this sort of, I shouldn't use this term, but it kind of has that, it kind of bleeds to death a little bit. You're just like, oh God, you're just watching it just drip, 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 lower gaps, break support, just can't find support. But it's really not a huge correction, and now it's kind of come back fairly quickly. It still has work to do, don't get me wrong. But on the weekly chart, you're just kind of looking at this sort of, after a pretty decent recovery, a 2 or 3 month downtrend that it's breaking on the upside. Just a couple more. Guidewire. This one's been strong anyway, but this is kind of, it was one of the first to, recover here. Big shakeout, big gap on earnings, been acting fine since. And this isn't really software, but it's sort of loosely. This is, Trade Desk. It's really part of a base that goes back to 2021, but it's just had this consolidation in here, nice earnings reaction. And the stock is, again, it's very tight in here. Again, there's round number resistance at 100. Who knows what happens? Maybe this thing breaks down. But overall, I like what I see, okay? But back to the market, we're doing pretty good here with the major indexes, but the rest of the market's sort of sideways. So it's kind of up to you how to play it. But overall, I would, I think having a little bit of caution, how whatever that means to you makes sense, but also still, not being in your storm cellar or reading all the negative headlines, still just paying attention, taking it on a stock by stock basis, and we'll see what happens here as we roll into the second half. Okay, as always, thanks for watching, thanks for listening, and be sure to come by again next week for another Cabot Weekly Review.